Hi and Assalamualaikum to all viewers. My name is Nurul Nadia binti Muhammad Ismail Bahrun from BA2495B. In this video, I'll be presenting about the effect of pandemic in financial institutions in Malaysia. Let's start with introduction. Islamic finance and bank are principles that govern what is good and permissible or halal and what is harmful and prohibited or haram. Sharia prohibits the receipt and payment of riba or NYC and financing of activities deemed harmful to society. Islamic finance is to ensure that profits are halal. The sector also grew at a rate of 50% to 25% per year, with Islamic financial institutions managing over 2 trillion. Furthermore, Malaysia sequenced and shared 0.659% of COVID-19 cases in the last 30 days, which is 3.7 times less than Singapore, which sequenced and shared 2.419% of its cases. Malaysia is most restriction imposed to combat the pandemic in the first quarter of 2022. Lockdown were lifted in most states. The economy had been fully operational for some time by then. As we move to the difference between Islamic banking and Islamic finance. Islamic banking refers to banking activities that adhere to Sharia Islamic law. Two fundamental principles of Islamic banking are the sharing of profit and loss and the prohibition of the collection and payment of interest by lenders and investors. Islamic bank make a profit through equity participation, which requires a borrower to give the bank a share in their profits rather than paying interest. Some conventional banks have windows or sections that provide designated Islamic banking services to their customers. Meanwhile, for the Islamic finance, provision of financial services in accordance with Sharia Islamic law, principles and rules. Sharia prohibits the receipt and payment of riba, gharar, maisir, short sales, and financing of activities deemed harmful to society. Instead, the parties must share the risks and rewards of a business transaction, and the transaction must serve a real economic purpose without undue speculation and without exploitation. Next is effect of pandemic towards Islamic banking in Malaysia. First of all, it has affected bank's performance. When businesses are unable to operate, they are unable to sustain themselves, increasing job losses in Malaysia. As the companies or small and medium enterprises perform poorly, that will poorly affect bank's performance as they are primary customers of bank. Next is there are moratorium system that allows customers to postpone their financing payment for 6 months. Bank Negara Malaysia remain committed to assisting all borrowers after the moratorium ends, recognizing the difficulties faced by affected groups such as households, borrowers, and businesses. Furthermore, in order to relieve bank cash flow burden, the government subsequently granted special tax treatment on moratorium interest by taxing the interest on a receipt basis. This tax break essentially allows banks to defer the taxability of interest income on such loan until the interest income is received from customers. Last but not least, of effect of pandemic is it affected the bank operation hours. Bank, as one of the essential services, could not afford to be completely closed even during the MCO period, as other businesses could. For example, from March 23 to March 31, 2020, most banks remained open but with shortened hours, closing at 3 p.m. instead of the usual 5 p.m. As it gave many effect on Islamic banking, the government has planned and ensured some initiative to overcome the economic and Islamic banking downturn. One of it is restructure the Islamic financing facility, accomplished by including a supplementary clause that refers back to the term of the existing agreement. A new agreement is required only if a different Sharia contract is used, such as switching from musyarakah mutanakisah to ijarah, or if multiple financing based on different Sharia contract are combined into a new single financing. Next is provide financial aid. Banks will provide financial assistance worth billions of ringgit to interested SMEs via commercial banks, Islamic banks, and development financial institutions regulated by B. In conclusion, many industries, particularly SMEs, are severely impacted by the COVID-19 pandemic and are unable to sustain themselves, forcing them to file for bankruptcy. When the economy is weak, the number of non-performing loans (NPLs) increase, forcing banks to make loan loss provisions. Various assistance programs were implemented to assist households, businesses, and other affected groups in responding to the crisis. Meanwhile, financial institutions, specifically banking institutions, approved the central bank's policies to alleviate the community's burden. Last but not least, the pandemic had an impact on banks' profit growth in the first and second quarters of 2020 and 2019. That's all from me.